Lots of Tesla stock news today and some important news too. Let's go through everything. Tesla has released a two-seater Model Y for businesses. In Norway, if you register your car as a van with only front seats, you will receive an incentive from the government, making it a much more attractive option. And it seems like France has a tax exemption for electric two-seater utilitarian vehicles for companies. And in France, the sales tax is 20%. As the buying opportunity for Tesla stock gets bigger, ARK Invest bought quite a bit of Tesla stock, $15 million worth of Tesla shares. There are many things you can say about Cathie Wood and ARK Invest, but you cannot say that they do not believe in Tesla stock. Morgan Stanley just lowered their Tesla stock price target from $345 to $320. They say, "We believe Tesla has significant attributes to be valued as an AI beneficiary, but the company must see a stabilization in the negative earnings revisions within the auto business first. We do not believe Tesla will get credit as an AI company as long as core auto earnings are being revised down. This process may take a few more quarters to see through, over which time our $100 bear case may be in play." I get emails from tip ranks when someone updates their Tesla stock price target, and one thing that always really sticks out with these analysts is you look at their either average return, 5.7% in the case of Adam Jonas, or success rate, which in his case is 50%. It's literally a toss of a coin. And also remember that oftentimes, the main job of these analysts is to get people to trade more stock because they generate commissions for their brokerages. The average individual investor underperforms a market index by 1.5% per year. Active traders underperform by 6.5% annually. Day traders with strong past performance go on to earn strong returns in the future, though only about 1% of all day traders are able to predictably profit net of fees. What I'm saying is you shouldn't read these things and say, oh, should I sell Tesla stock today or buy Tesla stock today? No, you can read these, take these into account, and try to put things into your long-term valuation model. And as long as you're buying the stock under what you think it's worth, keep buying the stock. Adam Jonas continues, "Our thesis on Tesla is that it is both an auto stock plus an energy AI robotics company. In fact, our valuation of the core auto business is $68 per share, representing just 21% of our $320 price target. Negative developments in the global EV market very much matter to Tesla and should reasonably have a negative near-term impact on the price of the stock. At the same time, however, we believe investors should not ignore the continued developments of Tesla's other plays, many of which are auto-related. For example, the recurring revenue opportunity from the Tesla fleet, embedded in our Tesla network services valuation, and other areas that we do not include within our $320 target, but that the market may include, like Optimus, which we expect to learn much more about during the 2024 Tesla AI Day." So Morgan Stanley now expects Tesla to deliver just a little bit under 2 million vehicles in 2024. And they expect the gross margin to fall to 11.4% instead of 13.2%. They say if there was ever a time for Tesla to potentially post a GAAP EBIT loss, it may be this year. Then Gary adds his own comment here. "This is consistent with the message we heard in our meeting with Tesla Investment Relations yesterday in Austin, which cited several 2024 headwinds that could cause Q1 volumes to come in sharply below street expectations to 475,000. Gary believes 425,000 is more likely. Management refused to agree that auto gross margins had bottomed at 16.3% in Q3 of last year, and their verbal cues reinforced Jonas' view that auto gross margins could fall further in 2024. Management implied that 2024 EPS could fall well below the Wall Street estimates of $3.07 versus $3.12 in 2023, which posits that 2024 is an investment year, says Gary. And yeah, if all of these things are true that Gary estimates here, likely the stock is going to present a bigger buying opportunity. Baird's analysts have reduced their Q1 delivery estimate to 421,000 after meeting with Tesla yesterday. However, they say that our long-term thesis is unchanged. Tesla's competitive advantages in both engineering and manufacturing were on full display during our tour and test drives in Austin. And we continue to view Tesla stock as the long-term winner in EVs. We view Tesla as a core holding despite the near-term setup. And they still have a price target of $300. That's for the next 12 months. James doesn't understand why Adam Jonas says the company must see a stabilization in the negative earnings revisions within the auto business first for the AI business to be valued fairly. If he is bullish on Tesla as an AI play, the auto-related earnings and its trajectory should matter very little. But I think the argument that Adam Jonas is trying to make here is, imagine you go on a date with a beautiful woman and her pictures look amazing, and then she shows up and she looks so beautiful, but she stinks. Everything is perfect except that one thing. The reason why she stinks is because she was just at the gym and she didn't care enough about you to shower before coming, because she's not really interested in impressing you specifically. In Tesla's case, the equivalent of a shower here would be releasing the next generation vehicle or starting to do a lot of advertising and spending a lot of money on that and doing it very effectively. In the meantime, Gary Black has cut his Tesla stock price target down to $250. He still believes that there is going to be an FSD OEM licensing deal in 2024, and then that Optimus production will begin in 2025. The Optimus project certainly has a lot of potential, and I think it will be once the production starts and the moment there's some sort of use demonstrated for it, there's going to be so much hype about it that it's likely, or there's a good chance, that the stock will go through another hype phase. Today, OpenAI posted a rebuttal to Elon Musk's lawsuit against OpenAI, but it raises tons of questions. It's also extremely relevant to us Tesla stock investors because supposedly that rebuttal reveals some very shady stuff about Elon Musk. Let's take a look. The authors of the post include Sam Altman, the leader of OpenAI. OpenAI intends to move to dismiss all of Elon's claims. When starting OpenAI in 2015, Greg and Sam had initially planned to raise $100 million. Elon said in an email, "We need to go with a much bigger number than $100 million to avoid sounding hopeless. I think we should say that we are starting with a $1 billion funding commitment that will cover whatever anyone else doesn't provide." OpenAI states that we and Elon recognize a for-profit entity would be necessary to acquire those resources. As we discussed a for-profit structure in order to further the mission, Elon wanted us to merge with Tesla, where he wanted full control. Elon left OpenAI saying there needed to be a relevant competitor to Google/DeepMind and that he was going to do it himself. He said he would be supportive of us finding our own path. In late 2017, we and Elon decided the next step for the mission was to create a for-profit entity. Elon wanted majority equity, initial board control, and to be CEO. In the middle of these discussions, he withheld funding. Reid Hoffman bridged the gap to cover salaries and operations. We couldn't agree to terms on a for-profit with Elon because we felt it was against the mission for any individual to have absolute control over OpenAI. He then suggested instead merging OpenAI into Tesla. In early February 2018, Elon forwarded us an email suggesting that OpenAI should attach to Tesla as its cash cow, commenting that it was exactly right. Tesla is the only path that could even hope to hold a candle to Google. Even then, the probability of being a counterweight to Google is small. It just isn't zero. Elon soon chose to leave OpenAI, saying that our probability of success was zero and that he planned to build an AGI competitor within Tesla. When he left in late February 2018, he told our team he was supportive of us finding our own path to raising billions of dollars. In December 2018, Elon sent us an email saying, even raising several $100 million won't be enough. This needs billions per year immediately or forget it. Elon understood the mission did not imply open sourcing AGI, as Ilya told Elon, as we get closer to building AI, it will make sense to start being less open. The open in OpenAI means that everyone should benefit from the fruits of AI after it's built, but it's totally okay to not share the science. To which Elon replied, yup. They also attached full emails from which they used a few sentences or a few words, which gives us a bit more context. Here's another one. Here's the email where Elon said that the chances of OpenAI succeeding are 0 if it doesn't raise a lot more money. But I have some serious questions here because quite a few large parts are taken out of here. So do we really have full context of this email? I don't know. So yeah, I have some serious questions about some of these things that they published. Looking at this whole situation, I agree with Farzad that I don't think Elon would have filed this lawsuit against OpenAI if Sam wasn't mysteriously fired by the board and then immediately return and then fire the whole board, basically. The reason why we are all here, I think, is because Elon does not trust Sam Altman, right or wrong. This is not about OpenAI being for-profit or non-profit, but more to do with laying everything out in the open so that everyone knows what the hell happened at OpenAI as it transformed into a for-profit company, formed a cozy relationship with Microsoft, and a subsequent firing and rehiring of Sam Altman, which caused a massive shakeup at OpenAI's board. So OpenAI's rebuttal to this is that Tesla and xAI are doing the same exact thing, but they don't get to be transparent, so why should OpenAI? Here's where I personally have a major problem. So Sam Altman approached Elon to form a non-profit AI group so that they can tackle Google's accelerating AI ambitions. It was not Elon approaching Sam, it was Sam approaching Elon. So then they formed this company. Then if you remember, it was Sam Altman and Brockman suggesting that OpenAI should become for-profit. Elon was extremely strongly against that, saying, either go do something on your own or continue with OpenAI as a non-profit. I will no longer fund OpenAI until you have made a firm commitment to stay, or I'm just being a fool who is essentially providing free funding to a startup. However, over time, I think it became apparent to everyone that to develop AI, the company needs to be for profit because that's how you raise money. However, this is where we don't have actual details, and I assume the reason why we don't have actual details is because it would look bad on OpenAI. Maybe that's not the case, but we just don't have the details. If Elon stayed, how would OpenAI go further? Would it just be shut down and then all the people would be hired by a new for-profit company? How would all of that work? Or would the work just continue under OpenAI as it was? My guess is the company probably would have been dissolved or shut down, and then a for-profit company like Tesla would have hired everyone, maybe not every single person, but an offer would be made to basically everyone. And the company would no longer be called OpenAI, therefore not breaking any rules or any initial promises. The way the whole thing was written, it made it sound like Elon wanted to benefit from the non-profit structure. It doesn't seem like that's the case to me, because they don't cover these exact details. So why would you leave these details out? You would leave them out either because you don't have the details, or these details don't benefit you. Knowing Elon and watching the whole Twitter acquisition and seeing that even Elon Musk on X can be community noted, and him not doing anything about it other than just posting under the community note that, okay, the community note was wrong or right. Knowing Elon's character, I don't think Elon would, let's say, let Tesla acquire OpenAI and still call OpenAI a non-profit company. If now the company becomes closed source, that just does not sound like Elon at all. Whatever research was done until then probably would have been available to perhaps everyone, and then Tesla would have hired all of these people, or Elon would have created a separate company like xAI and then hire everyone and how control of that company, I don't think we would have a situation where OpenAI remains an open AI company with closed source, for profit, but also a non-profit company. I don't think we would have had anything like that. Which is why I disagree extremely strongly with statements like this. Elon has portrayed OpenAI as a company with nefarious intentions for wanting to pursue a for-profit structure, and yet this was the plan all along, endorsed by Elon, when he stood to benefit, of course, if he got his wish and became its CEO. Lust for power, same reason why he had to buy Twitter. It was never about free speech. My eyes are wide open. Stop drinking the Kool-Aid. Nowhere in the OpenAI post did I see that Elon was going to take OpenAI, keep it as a non-profit company, make it closed source while calling it OpenAI, and therefore not dissolving the initial company. I didn't see that. As far as the second comment goes, lust for power, that's why he bought Twitter. Elon Musk obviously encouraged people to vote Republican. I would assume that James would vote for the other side, and therefore, if he sees someone that's against your politics, you will naturally gravitate to this sort of comment. This is what I personally think. And you definitely have a lot more free speech on X now than before. Earlier, if you talked about vaccines or COVID or any of these things, you were redlining with your chances of being cancelled. FSD is beginning to reliably execute maneuvers that most humans have difficulties with. This is James Dalma commenting on FSD 12 with Bradford. Let's take a look.
So V11 crosses the line in that situation, but it goes much farther across the line. Like this 12 is a much more human. Humans will not cross the line more than they need to. So this is always an interesting situation, and that was really smoothly handled. 11 will get to that stop sign, see the truck. That guy's truck is always parked there. And then get kind of confused because it's not sure if it's not totally clear if it's stopped or parked because of the place that it's at. So it'll be kind of jerky a little while, then it'll decide it's parked, finish the turn. That was really nice pedestrian handling. There wasn't any hesitation there. So this is only one lane wide. This is a section of road where, you have to stop at one end or the other.
That's cool.
Okay, let's see how he handles this pedestrian. Oh, that was super nice. So there's people like walking up this road. It's really common to encounter pedestrians in that narrow section. And 11 will stop and wait for the pedestrian to clear the roadway before it'll proceed, which is kind of unnatural and the pedestrians don't expect it. So this is where you kind of get the splits. See, it didn't stop and wait to see. And it doesn't always stop there. Okay, so
normally James was saying that at these splits it would stop. So we'll see how it does on the rest of the splits.
So 11, when it sees that motorcycle, it pauses to make sure, because it looks like it's about to pull out into the road. So there's the amount of hesitation it's almost completely gone. Like it's radically reduced. So this is a place where 11 stops to look to as if it's an intersection. 12 doesn't.
Elon replied to James Dalma by saying, "Thanks, that is an accurate assessment. Training compete is currently our limiting factor, but that issue is being resolved fast." Here's the assessment from James Dalma. V12 is going to be over 100x reduction in interventions compared to V11. This is not an incremental upgrade, it's a leap forward. The degree to which V12 accurately mimics human driving behaviors is startling, and Tesla's ability to capture the good behaviors without the bad ones is better than I expected for such an early release. Truly impressive. This is so good that I wonder if the Autopilot team might not shift development approach. Up until now, big improvements have required big changes, but the range of behaviors that are being effectively implemented with end-to-end path planning and control suggests to me that they can get the rest of the way to better than humans solely on top of more and better data and training. Anyway, at this moment, it seems that Tesla is more compute limited than data limited. Eventually, though, that is going to change. There's going to be more compute and not enough good data. And Tesla will be able to generate more good data than anyone else out there, which is why I believe Tesla will be the first company to solve FSD in a way that can be deployed to millions of vehicles. Roland published deliveries year to date from countries that he has data. Year to date, Germany is not doing as well as last year. Australia is doing basically the same, but all of these other countries mostly are doing quite a bit better this year than the previous year, year to date. But for this quarter, I am keeping my delivery expectations relatively low. In Europe, we now have 97% of the sales data, and we are not doing better than the previous quarter, but Q4 in Europe is always quite good, so we should really compare that to Q1. So far, we are doing substantially better than last year in Q1, but in Europe, the delivery wave has been largely eliminated, so I can at least say that this is not bad news. Here's a chart of delivery estimates for Q1. This is Wall Street and this is Troy. After today, I think it's fair to say that Troy's estimate should probably be lower with all these research reports coming out. For example, Gary Black is at 425,000 versus the street at 475,000. Tesla will give you 10,000 free supercharging miles when you buy a new Tesla vehicle by March 31st. This is up from 5,000 miles that was announced on March 1st. The IRS updated the list of EVs that qualify for the EV credit in the US. The updated list is a bit confusing for the Model 3. As we know it right now, no Model 3 actually qualifies. It is the old Model 3 Performance that qualifies, not the Highland one. But the refreshed Performance Model 3 has not been released. So maybe it would qualify later, that would be good. But as far as I can tell, this is not what this updated chart reveals. I think this is the old Model 3. I personally enjoy the Tesla stock buying opportunity, but a few people recently have not been happy with the bigger Tesla stock buying opportunity. So Sawyer shared a few words. Tesla has a deep bench with a lot of talent and experience. These individuals are hyper-focused on carrying out the goals that Elon and team have laid out. Many of these initiatives are very difficult problems to solve. There's a lot of noise on X right now, and we are in a period of lower growth than what we have seen from the company in recent years, but I don't believe this is a reason to be negative in the long term. It's going to be a bit of a wait, but 2025 is when the next generation vehicle will come out. Second Megapack factory will be ramping, Cybertruck will be ramped, Semi starts mass production, FSD will be really good. FSD V12 looks promising. James Dowma is certainly very excited about that. Energy will start to get really profitable. Giga Mexico construction will be underway. 4 more 4680 lines will be operational at Giga Texas, 3x increase from now. Optimus progress is insanely quick, and bigger growth, in my opinion, will return for vehicle deliveries. I'm probably forgetting a few things. I think Sawyer is right. He didn't even mention Dojo. I don't feel Tesla's long-term trajectory has changed. Elon is often very optimistic with his timelines, and some feel this is a negative. It sometimes can be. But it's partly those ambitious timeline goals that push his employees to deliver incredible results so quickly. This is not to say Tesla cannot improve on some things. I still feel the company should ramp up its EV education efforts even more, specifically around pricing, charging infrastructure, and reliability and range anxiety. Tesla has always been a roller coaster and require patience. It will probably be the same in many quarters to come. Elon fights the battles he feels are important. Always been that way and always will be. Don't try to change him. And in the meantime, as his fights get bigger, the attacks against Elon will also get bigger. His personal character will be attacked and questioned. Even more people will get the memo. Elon, no, not bad anymore. Elon, terrible. Elon, enemy. Focus less on noise and look at the broader picture. Adjust your risk profile if it makes you feel better. Wise words from Sawyer. He's right. Whoa, the state of Connecticut is proposing something insane. Prohibit parking electric vehicles in parking garages? If anything, it should be the opposite. Gas-powered cars catch on fire more often, so you want to park them less often in the garage compared to your EV. Also, whenever I go, let's say, to a public parking lot, especially if it's underground, even though you have these fans, it just stinks, and I can feel breathing in these toxic fumes, but it's just not good for me. But I see a Tesla drive by or any EV, even if it's a BMW or a Mercedes or a GM EV, I feel happy because I know I'm not breathing in toxic fumes after that vehicle drives by. So it should be the opposite. Gas-powered vehicles maybe could be prohibited from parking in garages, but not EVs. This is just ridiculous. Canaccord Genuity toured Tesla's factory this week, and they reiterated their buy rating and a price target of $234. They said, outside of marginal improvement or deterioration in the near-term outlook, what will truly re-energize Tesla stock and clear the air are three drivers, in our opinion. Number one, the next generation vehicle ramp. Absolutely, I agree with that. Number two, margin improvement led by increased full self-driving adoption. And number three, continued rapid growth in energy storage. We see clarity on and confidence in the trajectory of these three growth drivers as the catalyst to move Tesla from its current zigzag stock performance to recapturing its outperformance legs of old. Patience required. Monroe & Associates announced that they are beginning the teardown of a Cybertruck. This will be so interesting to follow. Like and subscribe if you haven't yet, and I will see you in tomorrow's episode. Thank you so much for watching.